Welcome back to another episode of Nothing Ventured, Nothing Gained, where we talk about everything related to fintechs, market trends, joint ventures, and other forms of innovations that are happening in and around the world. Today I'm joined by a very special guest, John from NAB. I'll pass it over to him shortly to describe himself. And we'll be covering a plethora of topics today, anywhere from AR, VR, AI, the future of finance, amongst other things. So please stay tuned and watch the whole podcast. And with that, maybe I'll pass it over to John. John, tell us who you are.
Thanks, Apurv. So John Blicq, I've just left National Australia Bank, and it's heavy on my heart. But I'm joining, so I'm super excited. I'm going to join a bank in Papua New Guinea called Kina Bank. And I'll be leading strategy, innovation, and I'm really looking forward to this. Very different market, very different level of maturity. It's going to be super fun.
Sounds super exciting, man. Fun. How did you, that's a pretty big change from Australia to Papua New Guinea.
It is.
How do you feel about it?
I'm super excited and I'm terrified at the same time, which is probably where you want to be, right?
It's a nice sweet spot between the two, absolutely. Yeah. Cool. So, obviously we've been speaking a fair amount over the last year, and I think we recognize that similar roles in our individual organizations, trying to be evangelists, so to speak, for specific technologies, which are a little bit outside of core technology and trends. So I guess with that in mind, what's been some of the biggest shifts you've seen from an innovation standpoint, especially how banks perceive them and what they've been doing more recently?
Yeah. So I think innovation is actually a byproduct of where you stand in the market as a bank. If you're a large incumbent, you have no choice, you have to innovate because everyone's coming for, to try to eat your lunch, and you have the most to lose, so you have to innovate, if you are a small bank, you almost have nothing to lose, so you can be the disruptor, you can really go after the big guys. I'm super concerned about the banks which are in the middle, who don't necessarily, who are happy with the status quo and don't necessarily think about the future of value pool, the future of customer, and don't necessarily invest into innovation capabilities. Now, when it comes to one of the biggest shifts, there's actually two massive shifts. The first one is, and it's not new, it's actually digital. Everything is digital. The cost of compute has so dramatically failed that anyone, a smart entrepreneur, can literally go and disrupt the bank. Which leads me to the second point, which is never it has been easier to disrupt a large organization. And that was not true 15 years ago.
Yeah.
So if you start looking at the people, at the likes of Revolut, Monzo, they are making a massive dent, and they have no physical presence, next to none. And that's the biggest shift as well in banking. You no longer need a physical presence it doesn't matter anymore.
Yeah.
It really doesn't matter anymore. You need to understand who your customers are, what are the emerging trends, and how do you connect with those emerging customers. Cool.
Yeah, absolutely. I think the way I kind of look at it is that there was kind of the initial brick and mortar banking, and that connected communities, and it was a place people would go to for a plethora of reasons. Obviously, over the last 10, 15 years, that's changed into entirely digital, exactly to your point, right? And we obviously created digital banks in that context, Mox being the first one we built in Hong Kong, and swiftly followed by Trust. So obviously had, a good kind of expectation with regards to the evolving needs of our clients. What I've also realized is exactly to your point, if you look at that sort of middle segment, there's almost always a concern for them to be cannibalizing their own business. But I think what needs to be recognized is actually in the form of you cannibalizing your own business, you get access to a ton of new customers 100%. And a ton of new capabilities. So 100%. Couldn't agree more. And segues nicely into my next question, which is, what are some of the trends that are genuinely reshaping financial services today? We've heard about AI and other components, but where do you think banks and other financial institutions, generally speaking, should be leaning in harder from a trend and an innovation standpoint?
So before I go there, I think there's one element which is absolutely crucial to recognize, and I'm sure your audience is fully across this, but just in case they're not, never look at a trend in isolation. Never, ever, ever look at a trend in isolation. A disruption rarely comes from one tech, comes from the combination of multiple factors. So for me, what I'm absolutely looking at and what is for me going to reshape the future of financial services is definitely AI. There's no question about this. I think we've just seen the beginning of what it's capable of. Quantum computing, I'm sure we'll have an opportunity to talk about this. but also Metaverse. That's a big word.
Yeah.
And there's many components. But like the broad topic for me is digital assets. And if you're a bank or a financial services institution, there is a massive shift which is happening, which is a shift from customer groups valuing physical assets to valuing digital assets.
Mm-hmm.
So if you think about a traditional model for a bank or an insurance company, we exist because we enable our customers to get access to physical assets.
Mm-hmm.
We fund houses, we fund equipment. The underlying assumption of the business rationale for a bank or an insurer is my customers want to access physical assets. Therefore, they need capital, they need protection. If you start shifting that assumption to my customers are going to want to own and protect digital assets, your value chain collapses.
Mm-hmm.
And that's massive. So you're not equipped to be successful in a world that looks like this, and you need to build tons of new capabilities. Starting to look at AI, quantum, digital assets, metaverse, for me, like banks cannot miss that shift, and it's happening right now.
Yeah. I mean, it's interesting you mentioned that because I think, obviously there's a massive convergence of multiple technologies coming together and they will play into each other for that matter, right? And digital assets, again, a space that we've been relatively active in, actually quite active in, if I could say it myself, over the last 7+ years through SC Ventures, but actually our first investment as a bank in digital assets even predates SC Ventures, which was our foray into Ripple back in 2015, 2016, if I'm not wrong. So, obviously a space that we believe is a very important space. Bitcoin, at the day of recording, the price is at $120,000, and you would not believe the amount of client queries I've received just today as to how we can help. So, yeah, I guess there's an element of, it moving in different directions, but then also the demand moving alongside that. Maybe a follow-up to that is, I buy the whole point around kind of tokenization and blockchain as a technology which will power different facets of our life and different facets of the financial services infrastructure. But I'd say over the last year, there's been kind of a bigger emergence on real-world assets, which again makes sense in the context of some type of assets. But when you look at fractionalization of property, which has been one of the areas that a lot of people have been focusing on, what I realized was that, Token 2049 or any of the other conferences I go to, the conversation quickly changes into distribution. And wanted to get your views that, well, maybe as an asset class, property makes sense from a fractional or a full ownership standpoint. But in your view, do you think the investor base is still lacking? Is there enough liquidity in that ecosystem for us to keep going on, or if there's something we're missing in that regard?
It's such a tough question. I think there's so many variables at play. I think there's a societal one, there's an economical one, and there is a demand one as well, and an offer and demand. If you start looking at, there's a societal shift where we have an entire generation of boomers. They've been driving the economy for the past 50 years. They are exiting the workforce. Right? They own the capital, they own the properties. And you get the emerging generation, the millennials, the Gen Z and Gen Alpha, who there's either a question of affordability of those sort of assets or those asset class, and that makes sense to have a distributed and fractional ownership model. So there's an economical question: can they afford it? But there's a more fundamental question, which is, do they want it?
Exactly.
Do they want it? And if you start shifting into consumption society and no longer an ownership society, then I think we're right in the middle. If I can't afford a house, I still need to live somewhere.
Yeah.
So I'm gonna rent something. You see the explosion of the build to rent in developed markets.
Australia being a big example of that.
Australia, US being a massive example of this. So it's such a complex topic. It's such a complex question. And again, if I'm early in my career, am I credit worthy? Can I buy an apartment? The average price of an apartment in Sydney now is close to $1 million. It's just ridiculous. So do I want to be prisoner to my bank for the rest of my life, or do I want to do something else?
Yeah.
There is another trend which is also incredibly interesting, and COVID has probably accelerated this, which is digital nomadism. I am no longer bounded to the city where I was born or where I grew up to work. I can go pretty much absolutely anywhere. I'm super lucky. I'm a European citizen, so I can work in like 27 countries without any sort of restriction. Being on top of this, an Australian citizen, I can work pretty much anywhere in the Commonwealth. I'm not a unique case, and that also, those societal trends are also going to shape those real estate markets at some point. Such a complex topic. I know I'm not answering your question.
All good.
I'm
no,
just opening up perspective for,
absolutely.
for your audience.
I guess it's more of a philosophical question, if anything else. But and I'm sure we could spend an entirely other podcast just talking specifically and debating about this. But I think one of the things, John, you mentioned earlier was around the metaverse space, and obviously, we made some investments and joint ventures in that direction. I believe you even wrote a book called Metaverse and Financial Services. Now, 2 years later, are we any closer to realizing that vision? And I know, again, metaverse, big word. It's a big vision, but would love to get your views.
Look, I think we're a long way away for many reasons. I think the first one is the promise of the metaverse is largely holding to, like people wanting to spend some time in the digital world and living their lives in the digital world. So there's a tech component, but there's also there's a societal component. Like, do I really want to spend time there? Like, it really doesn't make sense for me. So long way to answer the question. I don't think we're closer than where we were 2 years ago. I think one key component which was only emerging 2 years ago, which is now critical and we are seeing scaling super fast, is the rise of agents. That was barely there 2 years ago. It was like quite immature. Now it's there. So if you think about what I've always called digital twins, now it's called like AI agents. Think about the ability for you to create a persona, an autonomous agent that acts on your behalf and start generating revenue for you 24/7. And start blending with other capabilities. So let's take an example, like I want to get access to your M&A capability. I don't have access, I don't have an M&A capability at heart. But you want to get access to my strategic thinking capability. I know you have one, but let's assume you don't have one. My agent can start downloading your capability and start blending it. So if you start projecting those sort of capabilities down the track, you start creating absolutely unique digital assets which will generate revenue for you 24/7, and that becomes the most valuable asset you will own. So going back to the previous consideration of shift from physical asset to digital assets, I no longer necessarily care about my house as my main asset because my digital twin or my AI agent becomes my most valuable asset. And as the metaverse starts spreading and growing and scaling, that capability will reinforce and the value of that asset will reinforce. That's a long answer to your question, but I think it's absolutely critical because what we are seeing emerging is a brand new economy, an absolute brand new economy. And if you are a bank, you will need to absolutely understand those trends. Think about you're shopping for a mortgage, or you're shopping for a loan, whatever. Nothing stops your AI agent to download the financial experts module and start shopping for you. So as a bank, you will need to no longer sell your product to the human. You've completely removed the emotional connection to the product. You have to sell to a machine. So you have to go through the filter of that machine. How do you do that?
Yeah.
How do you do that? It's a complete disintermediation of banking as we know it. That might take place in the metaverse. That might take place in the digital world. Like, don't necessarily need to call this metaverse. So I still think we're a long way away. But the future of banking goes through the metaverse and those core components, which are AR, VR, and obviously agentic. And we gotta be ready for this.
I mean, it's a super interesting point, John, because you're almost removing the emotional element from a decision-making standpoint. And I wonder what that looks like. Absolutely get the mortgage use case, but then what does that look like from a corporate banking standpoint down the road? What does that look like from different facets of banking down the road, where relationships are a key decision point as to how some of these large organizations make decisions as to who to partner with, who to work with, who to get their banking services from. So super interesting. And one of the other things, obviously from an AI agent standpoint, that we've done more recently is a new joint venture that we're looking at the edtech space. What's interesting, I guess, in the context of AI agent and that JV is that, it's almost a realization of an avatar and scenarios and role-playing situations that are so much more dynamic than they have ever been before. I've been a gamer since I was a kid, and obviously the ones that are watching that are gamers would know what NPCs are. But the point is that imagine, you're not kind of engaging in a dialogue with a predetermined set of questions and answers, but it's very dynamic in nature. And that happens in gaming, but imagine that happening, to your point, in different facets of life and different choices that you make, where maybe you're no longer the person making the decision, it's exactly the machine, which is a little bit, I would think, a more quantitative decision that they make. So just coming back to Metaverse quickly, John, would love to get your views on some of the use cases that you've seen. What's been interesting, what's been promising, what's had some yield that maybe helps our audience realize that there is real value in the space.
Absolutely. So look, I'm sure we're going to talk about Akashaverse, because I think that's a fascinating use case. But if you put this one aside, there are two which I find, actually there are four which I find incredibly interesting. The two kind of mainstream one are HSBC and AXA. HSBC built a metaverse experience on the sandbox, where the concept is trying to connect with their future customer. And I think it's incredibly smart, because you want to be seen where your future customers are. It's not for them to make the effort to go to your sphere of influence. It's for you to make the effort to go into their world and start connecting with them in their world, and showing them how banking can actually help transform their lives. Because people don't necessarily like banks, but banks change lives. Yeah, it's as powerful as this. So I think it's a very smart use case. The other one that I really like is from AXA. So AXA, massive general insurer based out of France. And they've built on Decentraland an experience where they do not communicate on their product. And I think it's incredibly smart. They communicate on their purpose. And they communicate on the reason why they exist, their connection to nature, their connection to climate. Again, here it's, if you start communicating on values and not on product, that gives you permission to go and connect with customers, and your emerging customers also where they are. They are in the metaverse. One of the use cases for them is actually to start poaching talent. One of the theses is that the tech talent of the future is already there, so they need to be there, and because they are competing with the big tech, they need to be seen there to attract people and communicate on values, not product, which I find incredibly smart. So that's Metaverse if you take the umbrella approach. But if you dive into some components of it, so I'll go back to this notion of AI agents / digital twins. There's a company which I'm absolutely a big fan of, which is called Merlin Technology. They're based out of South Africa. They have a presence in US, Australia, and I think they have a presence in Southeast Asia as well. Their technology is called tacit knowledge automation. Basically, they are in the business of replicating human expertise. And they've done some work with a very large Swiss insurer and a very large bank in South Africa. And the use case for them is let's replicate expertise, which is going to be scarce. So for the insurer, they've actually realized that half of their senior claims manager will be gone because of demographic shift. In insurance, the moment of truth is when you make a claim. That's the promise of insurance. If you lose half of your workforce in a span of 3, 4, 5 years, you are putting at risk your moment of truth with customers. And the quality of a claim manager and its expertise is a byproduct of the experience. You don't invent experience. So if you put a junior staff member, the work is not going to be done as well as with someone who's done that an entire career. So they're replicating that expertise so that they can start automating those claims decisions and start triaging the high volume, low value to the machine and focus on the high value, low volume to the human and the high volume, low value to the machine.
Yeah.
The South African bank use case is rather similar. There are areas of expertise which are very, very scarce and in high demand. Think anything which is financial crime related is in super high demand. Anything which is tech security related is super high demand. So they've created duplicates, digital twins of those experts to serve their own need. And it was working actually so well that they decided to open up the library of digital twins to their strategic customers.
Wow.
Which I find even more smart. It's the philosophy behind here is the success of the bank is a byproduct of the success of its customers. We are facing those problems. Our customers are most likely facing those problems, and our strategic partners. Let's open up the capability to these people. So it's more a component of Metaverse use case, but I wanted to dive into those umbrella use cases, but also the very pointy business problem oriented use cases.
I mean, absolutely. I could resonate a lot with that, John. We made obviously some experiments alongside some of these banks in the sandbox in our early days, so about 3 years ago. We kind of created the Standard Chartered Bank Marathon in the sandbox. And the idea was, as you compete, and the ones that know the space and know how to compete in a virtual environment better, they were able to get access to a very specialized floor. And when you get access to that, there were 2-3 job listings that were specifically for that. So we saw a lot of great traction for that. And then actually, obviously 2-3 years ago, Metaverse was all the hype when it came to clients. And they were constantly asking us, what are you doing in this space? And that led to us building out Akashaverse. And obviously Akashaverse, we spent a fair amount of time debating on the business model, the technologies at place. And we ultimately launched it earlier this year. And I wouldn't necessarily say it's entirely Metaverse. It's more kind of using experiential, spatial / AR, VR technologies to power new use cases. That includes anywhere from kind of access to pilgrimages. So, India is a nation with a lot of monuments and a lot of kind of pilgrimages, some of them being super hard to get to. And the idea was, how do we then bring this pilgrimage home by providing access in a virtual environment to the people across India? The thing we had to pair that with was the fact that, well, if you look at penetration of virtual goggles, whether it's Oculus or Apple for that matter, it's sub 1%. 100%. So we had to create it hardware agnostic, which we have done thus far. But part of the reason I believe we're continuing on this journey is because, there's an element of a gestation period to this technology. There's an element of other technologies also coming up to speed when it comes to powering the overarching vision. But ultimately, if I go back to my earlier point, we went from brick and mortar banking to digital banking, and maybe the next step is actually just entirely virtual banking. And one of the companies that I was speaking to in Vietnam, they had created an entire virtual replicate of one of the largest banks there. And you had a virtual ATM, and you could go in and you could kind of check your balances, but then they took it a step further. You could have access to RMs, your private bankers, or whoever it is that you want to speak to in a virtual room, and be able to kind of have a conversation with them. So maybe that's the next step. And one of the things I also realized was, actually, when we think of AR, VR, Metaverse, we largely think of the younger demographic, which is to a large extent true. But you start looking at aging populations. You start looking at the Japan of the world, or the Korea of the world for that matter. And actually, that population can also be served as long as you can create something that's user friendly, where instead of them having to leave their house, go to the branch, or trying to figure out how to access online services, you're able to have a very dynamic conversation with them at the comfort of their own home and give them their banking services. So again, obviously very, very interesting area, an area that we obviously both are very passionate about. And I hope to continue kind of in this direction with our partners, with other organizations, to see what else we could do in this space. Now, let's shift gears. Obviously, there was FourTwoThree that just happened, and we just announced that in London Climate Action Week last month, if I'm not wrong, end of last month. And obviously, it's a practical climate action, which is backed by SC Ventures and NAB and NatWest. I guess the question is, why is 423 needed now? And would love to also kind of get your experience, because I know it took a bit of while, but that's what happens when two large organizations come together in a conviction area.
Okay, so the world needs 423. Full stop. But the world doesn't know it yet.
Yeah.
So for the audience, FourTwoThree is a platform which targets small and medium-sized businesses and help them with a few very simple questions plus data connection get to a PCAF2 carbon emission profile plus some recommendation actions to go on the journey of towards net zero. So why is that needed? Let's take a macro view first. Despite what you hear coming from the other side of the Atlantic, it's very difficult to deny climate change. And a 3+ degree world is largely uninsurable.
Mm-hmm.
And if you cannot insure, it's very difficult to finance. So that is the economical problem. There is a societal problem, which is it's probably the largest, it's a mega trend, and that's one of the largest crises that humanity will face, and we'll face it together. Like, there's no choice, there's no runaway from this. So, 423 is needed because SME, so small and medium-sized business, compose half of the world's supply chain, and there is no version of the world that reaches net zero unless those organizations are actually helped to understand their mission and go into the right path. If I'm a small and medium-sized business owner, I'm working crazy hours, 10 jobs at the same time, trying to do whatever I can to satisfy my customers, and you cannot ask me to become a climate expert. There's no version of that exists. And that's where the platform actually kicks in and make it incredibly easy to identify your carbon emission profile, but also your transition option. So that is why the world needs something like 423. If you start looking at it from a macroeconomic perspective, there is phenomenal opportunities to the climate transition. So put aside physics, put aside politics, look at this from a macroeconomics perspective. I'll just use Australia as an example because that's where I live and I understand the economics of this country pretty well. Transitioning the Australian economy to net zero requires $1.2 trillion worth of lending. If you compare this to 2024 Australian GDP, that's 2/3 of the GDP. Mm-hmm. Now start expanding this to the entire world. This is the largest need of capital deployment that humanity has ever seen and will probably ever see for a very long time. Besides, that's intergenerational crisis that we're trying to solve together. So components like 423 in that context are incredibly critical. But there's also byproducts. Think about that capital need to transition the economy, but zoom back and look at what happened in the 60s, 70s. Mm-hmm. The day we live in today is a byproduct of technologies which were invented during the space race in the 60s and 70s, where US and Europe, major threat, Russia, USSR, so that's the existential threat. It's deeply philosophical, it's deeply ideological, only one world can survive, and we're going to pour money to understand how can we win space, and technology is born, and the economy we live in and thrive in today is a byproduct of that. We're going to do exactly the same with the climate transition. We just don't know it yet. We will have to pour trillions of dollars. Mm-hmm. And that's going to go to research. That's going to go to emerging tech, and that's the platform for future generations to thrive. And besides, that's a species threat.
Yeah, which is, I think, probably the most existential threat there could be, right? Which leads me to my next sort of follow-up question or point. What's it going to take for the globe to start paying attention to this a little bit more? Because my personal opinion, and it's entirely personal, is that people know about it, but at scale people don't care yet. What do you think it's going to take?
So signals, it's going to take signals. We did a lot of research in that space, and what we found absolutely fascinating is what we call the distance to climate. Mm-hmm. You can not deny climate change, but if you don't see it, what would you care? Mm-hmm. Right? There are strong signals which are emerging day after day, and I think the signals are going to magnify the problem and going to force society to act and individuals to act. I'll give you a few examples. Let's go back to US, richest country on the planet, by a long stretch.
Mm-hmm.
Zooming into California, the richest state in the richest country on the planet. You cannot insure a home there. All the major insurers have actually left that market because it's no longer insurable.
Mm-hmm.
And that is real. So the distance to climate for Californians is going to be now shorter and shorter and shorter. It's no longer someone's problem, it actually becomes my problem.
Mm-hmm.
If you start looking, I was reading an article about 2 weeks ago, which was absolutely phenomenal, blew me away. There's this island nation in the Pacific called Tuvalu. I'm sure most of you have heard of this island nation. It's 10,000 people. The highest point on that island is about 6 meters,
Mm-hmm.
but the average is about 1.5 meters. So they are mostly condemned by sea level rise.
Mm-hmm.
Everyone knows that. Do we do anything about it? Maybe not quick
Mm-hmm.
enough. Australia has created a special visa for Tuvaluans to live permanently in Australia. In a matter of 3 days, a third of the population applied.
Wow.
So we are seeing a signal of climate refugees. It's 10,000 people, is absolutely dramatic. Now, put this in the context of other countries which have characteristics like this.
Mm-hmm.
And I'm looking at you, Bangladesh.
Mm-hmm.
160 million people living near the sea level.
Mm-hmm.
Their distance to climate is going to be incredibly short because they've lived with monsoon for a very long time, they've lived with floods for a very long time. At some point, they can't live anymore.
Mm-hmm.
160 million people who will have to go elsewhere. And elsewhere, it's like, either going to be India or going to go to South Pacific, the Southeast Asia. Australia will have to take its share. And all of a sudden, you have millions and millions of people who are displaced. And that put massive economic pressure on infrastructure. Let's assume that Australia takes its share of those migrants, of those climate refugees, and let's say we take 2%,
Mm-hmm.
3.2 million people. That's over 10% of Australia's population. On a country where the infrastructure are already saturated, there's not even enough housing stock. So that put pressures on everything,
Mm-hmm.
and that's reducing the distance to climate for absolutely everyone.
Mm-hmm.
So it's going to take those sort of signals. I hope we never get there. I hope we, get on track to not get there. But that's going to be those strong signals which are going to force us to act.
I can't even imagine the geopolitical fallout amongst other things as this happens. I mean, that's a crazy. Would love to read this article myself as well. Do you think it's going to be too late by the time we get there?
Look, I'm an optimistic, so I hope not. But it's hope. Hope is not a strategy. I deeply believe in humans' ability to adapt, but also human genius. So I'm convinced that technology can help, but where technology can't help is actually mindset.
Yeah.
Technology can't help change mindset, and unfortunately, the signals we are seeing from rich nations at the moment are going into the polar opposite direction of where we should be going.
Yeah, that's very unfortunate. Last thing, last trend, technology I'd like to discuss, quantum computing.
Yeah.
Now, obviously, we've spoken about AI, we've spoken about ESG, we've spoken about Metaverse, a ton of other things. Quantum is an interesting area, and it's interesting because it's largely theoretical to an extent, but what the theory states is entirely radical if it can be realized. Now, obviously, there's different things like quantum inspired and tensor networks to quantum computing. There's also an impact from a climate standpoint, right? A weather pattern prediction and all those other components, which I'm sure we'll get into. Would love to get your views and NAB's views as to how are you looking at from a quantum computing standpoint. Where is it on your radar, and what do you see from this technology?
It's a fascinating technology. If you look at, so it's been on the disruption trend radar for a very long time. The way we are looking at it is, first of all, it's educating ourselves, because we are the byproducts of a binary compute system.
Mm-hmm.
Our careers have been built on this, our systems are built on this, and quantum creates an absolute brand new world where you need to educate yourself to understand what is different versus classical computing. So we got a working group. We've created a mini version of NAB where we have top executives from all the hyper relevant areas. So we get first line, second line, enabling units, and thinking about what is the most likely areas of our business which are going to be disrupted, and we're not looking at this in silo, we're looking at this in combination. There is a strong, absolute strong human component to it and talent component to it. We're convinced that the quantum talents are going to be incredibly scarce, and we need to prepare for that. So we need to understand how quantum is going to disrupt our business, how it's going to disrupt our people, so that we adapt our systems, attract the right talent, but also retain them. So we're looking at this from, we're absolutely convinced that it's going to completely reshape the way we are thinking about credit risk modeling. Climate is another one. We're convinced that it's going to help change climate modeling and by an extension credit modeling. And the better you are at credit modeling, the better you are at capital allocation, the better you are as a bank. So we think there is a massive role that quantum can play in that space. But there's also an absolute different lens. So going back to my earlier point, the success of a bank is a byproduct of the success of its customers. So what we're trying to also understand is like how quantum is likely to disrupt our customers. And do we have a role to play in helping them understand what it means for them? I'll give you an example. We are convinced that it's going to revolutionize the biotech and pharmaceutical industry.
Drug discovery,
medical discoveries. Like we are convinced it's going to completely revolutionize those industries, and we bank these people. So we need to ensure that on their radar, they are looking at what it means for them, because we are looking at what it means for them. So the question for us is like, can we start giving them our perspective on what we think their risks are, so that they equip themselves? By no means we have the intention to tell them what they should be doing. But by all means, we want to make sure that they are equipped to look at the problem from also a lender lens. So that's the way we're thinking about quantum computing, and it's absolutely fascinating.
Couldn't agree more, man. Obviously, alongside Metaverse, quantum has been another area that I've been heavily focused on over the last 2 years plus. What's been interesting, I think, in recent times is that this kind of emergence of quantum inspired. And that, I think, is making the technology a bit more real, and giving organizations the yield so that now they have a tendency to kind of go down the full quantum route. And actually, we're in the midst of putting together a joint venture in the quantum computing space. It's called Project Quanta. You'll hear about it in a few weeks when we publicly announce it. But the idea there was that, as a bank, we would never build a quantum computer. That's not what we do. So option A was to invest in these technologies, which is a viable path, and some banks have absolutely done that. Option B was to see how we can find the right joint venture company and a quantum computing hardware provider to bring together from a financial use cases standpoint. So some of them you've absolutely hit the nail on the head with regards to credit modeling and Monte Carlo simulations, all the way to some of the more nuanced ones, which I would say are a little bit more nuanced possibly to Standard Chartered Bank, things like emerging market derivative pricing, and how do you make that more accurate, better performing, and so on and so forth. So again, a very interesting area around how do we bring quantum technologies and provide a differentiated capability, not just to the bank, but to our clients. Manufacturing optimization is another fantastic use case where this could lend itself quite nicely. So again, obviously it's a Horizon 3, and I hate using these Horizon words, but for a lot of people it is Horizon 3, but so was AI like a year ago. So, I would say if you haven't yet, please do have a look at quantum computing or quantum inspired. I think it's a very interesting technology, but one that's seeing an exponential increase in government funding, in venture capital funding. I think last year was the highest year of venture capital funding that went into the space, and actually public market funding as well. There's a lot of speculation, as there is always, but could be another interesting use case in an area that we could look at. So I guess with that, John, that's most of the topics I wanted to cover. Is there anything else you wanted to say before we shut down and take this forward?
Look, I think going back to that disruption, the topic of disruption and horizons, like people tend to associate disruption and horizon with time. It is absolutely wrong. It is absolutely wrong. I'd argue, and I'll probably finish on this on quantum, I'd argue it's already there. Like, we've always said, oh, it's 15 years away, or it's 3 years away, or it's like, no, it's already there.
Yeah.
Like, we are seeing, as you said, like, we are seeing the ecosystem being ready. We are seeing capital being, allocated to that field. We are seeing state actors investing tons of money in that space. We are also seeing bad actors already participating in that space. So I would say that it is already there, and never think of disruption as, oh, it's a problem for later. No,
yeah.
It's a problem. It's real, and it's now.
Yeah, it's here. It was here yesterday, and it'll become more and more important and relevant as you get disrupted in that context. Cool, John. Thank you so much. Thank you for your time. Congratulations on your new role, and good luck to you on that front. For everybody watching, we'll be back with another episode of Nothing Ventured, Nothing Gained. Let us know other topics you want us to cover. And as always, our link is in bio, which is on LinkedIn. So I don't know if that works for LinkedIn because people on YouTube usually say that. And do reach out if you have any questions or if you want to connect with either of us. We'd be more than happy to engage. Thank you.
Thank you.